Welcome back, cool cats. We're going to kick things off with Bitcoin, but we got a lot to cover tonight. We're going to get into SPY, QQQ, and many others. And I covered a lot of key levels in my last video, so if you're interested or if you see something you don't know what it is, check out my last video linked above. So as I had shared previously, we had this ascending channel here, which is essentially overhead supply. It's got a very big range, as you can see, but that hadn't been broken before. And as you can see right now, Bitcoin is trying to breach it, and we need to see if it can breach it and hold above and confirm it as new support. Zooming out to the monthly time frame of Bitcoin, I charted these parabolic curves because I want to show you something really interesting. As you can see, obviously the main support has risen, but it's on a curve, and so has the resistance likewise. What this appears to be indicating is that there are sort of diminishing returns as Bitcoin gets more and more mature. Just like we follow this line here, we can see if we continue to trace it, yes, it does go up, it does go up, it does go up. It keeps going. However, the resistance here also follows along it, but there is this instance in which we could potentially see Bitcoin essentially stabilize and go between this support and resistance back and forth, back and forth. And what it seems to be indicating is that Bitcoin at some point may actually top out at like 200,000 or something like that. Unlike what a lot of people are saying, where they're like, oh, Bitcoin's going to 1 million, it's going to 10 million and all that. If this is accurate, this is indicating that's not the case. Now there's two different trend lines I want to show you. The first one, again, this is on log scale right now. This purple trend line right here, if we ignore the green resistance, if we assume that that isn't accurate, if that's not the path that Bitcoin will take, if we draw a trend line from here to here, this could indicate that Bitcoin could come all the way up to like 225,000, 250, on and on and on. But if we switch over to a non-log scale, and now this is kind of ugly because of the way it was drawn. If we draw this blue trend line between these peaks, we can see that Bitcoin might come up and top out somewhere between like 110 to 115,000 and then pull back. Now, me personally, I'm more of the opinion, like I believe that this resistance line, this curved resistance line, is actually more likely what path Bitcoin is going to take. But notice here how I've plotted each Bitcoin halving. So we had the first one was on November 28th, 2012. The second was on July 9th, 2016. The third was on May 11th, 2020. And the last one was on April 19th of 2024. The next one is projected to be in April 17th of 2028. But here's a phenomenon I want you to see. Everybody talks about how after the Bitcoin halving, there's always this parabolic run and then a pullback. That happened after the first one, we got this pullback. After the second one, got this pullback. Notice how much more quickly this rallied after the third halving, came back, and we rallied into the fourth halving. So it's actually possible that this cycle is kind of like coiling up. And it may be that because we rallied into this particular halving, history may not repeat like it did before. We actually may see this peak out sooner than expected and then come back down and then rally into the next halving. So I know the perspective changes based on whether you're looking at linear or log scale, but I would love to hear y'all's thoughts in the comments below. What do you think Bitcoin's going to do? Is it just going to follow this curve? Is it going on a linear path? How do you think that the Bitcoin halvings are going to affect Bitcoin moving forward? And obviously, if Bitcoin gets above this resistance and just keeps pushing, it's definitely going to invalidate this resistance line. All right, we're getting straight into QQQ, then I'll move on to SPY. I'm so excited to share with you all what I found. I spent hours really extensively charting QQQ and SPY, and it might blow your minds what I figured out. And again, if you're not sure what you're looking at, I linked my previous video, and in that video, I went over what all of these different levels were. I shared before that we are currently inside of this channel that's in purple. You can see multiple touch points. We came up here, rejected, bounced, rejected, bounced. We're right in the middle of it right now. But something that I noticed, which is kind of eerie, honestly, if we zoom out a little bit and if we look on the RSI, Look how we have multiple touch points. This is on the weekly time frame for the RSI. And if we extend these all the way out, and if we notice where these touch points on the RSI line up here, 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 on and on. If we are to assume that this resistance and support on the RSI is also lining up with this channel, what it actually indicates is that the Qs, even though we're going to have a lot of volatility, because there's a lot of space in between here. Like you could go up to 570, you could come back down to 515, you could go back up to 650, back down to 576, etc., etc. This could very well be indicating that volatility on the Qs is going to continue to coil, and we're going to get more and more up and down swings that are very heavy. But the kicker is this is still in an ascending channel, indicating that the Qs want to keep moving up. And if you remember from my last video what this red line represents and what this green line represents, this is this main channel, and this was the main resistance line that has never been broken in years. This indicates that the market, at least the Qs, are going to keep moving up, 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 up until it starts meeting this resistance. And then that is going to coil more and more and more. This is basically moving all the way into 2026. Look up here for the date. All the way into 2026, possibly even 2027, at which point this is indicating that the market may make a real choice. And if it does, we could see the Qs go from like 850 all the way down to this main support line around like 550, 500, give or take. It would depend on where it actually broke down from. But I would love to hear your all's thoughts. Like if this is valid, if this actually stays in this channel and in this volatility contraction pattern, what kind of events in 2026, near the end of 2026, could lead to a potential sell-off, or on the flip side, could cause this to break that main resistance? So please leave a comment down below. I would love to hear your all's thoughts. I'm just one person, and I'm sure you all know probably a lot more than I do. And if you're wanting to know targets for this week, there is such a convergence of multiple support and resistance lines right now. It's kind of hard to tell. And I think when we hop over to SPY might give us a better idea. I shared before, it was in one of my previous videos, there was a giant cup and handle. And for Qs, that pattern was targeting somewhere around like 530. We have yet to meet that pattern target. So there is always the potential that the Qs are going to try to push up at least to that level to fulfill that. And if this symmetrical triangle pattern gets fulfilled, we could see it go up to like 550. There is always the possibility we could come up to this main resistance line. And if this previous theory I just talked about is accurate, we could absolutely see the market just bounce around in between these levels. But here's the main thing that I'm really excited about is if this channel is legitimate, this could be some of the easiest money made ever. Me personally, this is not financial advice, but imagine coming up here, grabbing some longer dated puts, maybe a few months out, and waiting for it to come back down to previous support, maybe even down to here, and then buying longer dated calls and just going back and forth for the next like 2 years. You could be rich if this channel actually holds. And to be honest, like a lot of the levels that I share on here, it's like some Discord groups are charging like huge money for this. I'm giving it for free. I love trading and I want you all to be successful. And this is obviously not financial advice, but I think I'm pretty decent in analysis and I want to share what I'm seeing with you all. And so the only thing I ask for is please, if you think so too, if you think this is good analysis, please like, share with somebody who can benefit from it, subscribe and tap those notification bells, or join me on X or on StockTwits so that you won't miss these updates. Switching gears, we're moving over to SPY. Just kidding. We're going to clean the charts up here just a little bit. So these are the main levels that I shared before. And if we drag this over, this is going to be obviously similar to the Qs. We're seeing something on the weekly RSI. If we join this resistance and the support, we join these touch points here, this pattern seems to be indicating a termination of somewhere around like the beginning of 2026 or the end of 2025 for SPY. So SPY is obviously in an ascending channel as well. It primarily stays within this yellow channel, and when it breaks that upper bound, it hits this main red resistance. When it breaks the lower bounds, like this was in the time of COVID, it came down and it hit this main support. And as you can see, we're back inside of it right now. And if you know the significance of this red line, if you've been following my videos, you know that this has never been broken. So it's very interesting right now. Not only are we at that red resistance, we're also at this yellow resistance as well. So the last time I checked, the futures right now are kind of ripping. They're trying to rip back up to the upside. But I mean, I believe very strongly if these resistances here cannot be broken, we're about to get a huge, huge pullback in the market. I do find it interesting when we look at the RSI for the weekly, though, that we're sort of almost to this overbought condition, but nowhere near where we could be. This almost seems to indicate that SPY really does want to break above that. And if it breaks above that and then confirms it as new support, like all bets are off. There's nothing defined beyond that to indicate any sort of like overhead supply. At that point, it would just be key psychological levels. But I want you to keep in mind what I just shared on the Qs and look at what we got going on in SPY. Even if SPY gets a pullback, as we've seen recently, whenever SPY is getting weak, the Qs have been picking up the slack. So we absolutely could see a sell-off on both, but hit support on the Qs and vice versa. And so one is essentially carrying the other in this uptrend. If you use the Ichimoku cloud, you know just how useful it is. I've got the Ichimoku cloud here, the baseline of it, which we can see SPY came down, hit it, had a few days of consolidation, and then bounced from there. But does it have enough steam to get up here? We've got the upper Bollinger Band up here slightly above this resistance that has never been broken, but we've got it way down here too. So there's a lot more room to fall than there is to move to the upside. But if SPY pulls back sharply, we could even see it coming down like maybe to around like 570 if we got a really sharp pullback. And I think we would definitely need a catalyst for that. But even that could hold and potentially offer a pretty decent buying opportunity. Now, quickly switching back to the Qs, we can see it's a little bit different. The Qs actually got below the baseline, which is a little surprising, but it got very, very close to this main support line. And we got very, very into kind of like just the beginning portion of the support of the cloud, and then we bounce from there. But there is a lot of overhead resistance on the Qs right now, and you can see on the Bollinger Bands we're kind of closer to the upper end than we are to the bottom. But even if the Qs pull back, we could see the Qs pull back to maybe like 495, 490, somewhere in that range, and then potentially bounce from there. This center line, as I shared in that last video, is very, very crucial. As long as you stay above it, we're still in the exuberance phase of the bull market. NVIDIA has been the leader of the pack, and so we have to keep an eye on it at all times. I've previously gone over this rising wedge here in red and this yellow channel that kind of has been contracting. So I'm not going to go over that in detail in this video, but here's the main thing I want you to see. We had this ascending channel. NVIDIA broke above this main resistance shortly, came back down into this channel, and it's found its way right in between this resistance and support wedge. And look at this. On the weekly time frame, look at this bearish doji candle rejecting off of that red main resistance line. I really, truly believe if this holds, and if NVIDIA cannot get above it, it absolutely could come back down to the support here somewhere around like 130, 132. If that were to break, we could see it come back down to the main support line all the way down around like 115, 110, somewhere in that range. But like I've shared before, if this rising wedge, this multi-year rising wedge pattern finally actually plays out, we could see NVIDIA go from, let's say it broke down from like 116, 110, somewhere in around that range. We could see NVIDIA eventually come all the way down to around $70 a share. Now, obviously, you're going to have dead cat bounces, you're going to have counter trend rallies, but that's what this pattern is targeting over the long term. But I do find it interesting when we look at the RSI down here. The RSI is actually forming more of a falling wedge, which I shared in one of the previous videos. That this pattern almost would indicate that at some point NVIDIA is just going to blast off like a rocket, but we have to see there's definitely a ton of bearish divergence that's forming here, and that bearish divergence is the main thing that I'm paying attention to. And if the coiling of volatility wasn't very evident on the weekly chart, I just switched to the 4-hour. I mean, look at this. Like, this is just so obvious that NVIDIA is about to break out in a very, very major way. And honestly, considering the recent earnings report, you've got Blackwell chips that are overheating. You've got Jensen Huang, who's kind of already talking about like alternative AI startups instead of companies like Meta and Tesla being like the main buyers of this. It's not looking too good, at least in my opinion. Even the analysts, I feel like, are kind of grasping for straws. If the market agrees, we could absolutely see this resistance hold, and we could see some supports start to break. Just like I shared in one of my other posts too, if it turns out, and I'm not claiming this, so this is, let's not turn this into a legal matter. If it were to turn out that SMCI had been cooking their books or something like that, I mean, their auditor just left. Well, SMCI is one of the biggest buyers of NVIDIA's chips, and they make up a pretty big proportion of NVIDIA's accounts receivable. So it's money that hasn't even been paid to NVIDIA yet NVIDIA has it on their books as revenue. Again, I'm not claiming anything bad against any of these companies like this, so please do your own due diligence and do your research so that you can verify whether or not any of this stuff is accurate. We won't really know until it comes out. A lot of you are interested in TLT, so am I. I mean, long bonds, anything like the 10-year yield and beyond, obviously is going to affect a lot of things in our economy. So we can see on TLT, the weekly is getting into an oversold condition, but as you can see, it could get a lot more oversold than this. And I shared in a previous video, we just have a ton of overhead supply. I actually showed the Ichimoku cloud and showed how on almost every single time frame, there's just a ton of resistance. On the daily time frame, we can see how the RSI is building more and more strength, which is a bullish sign, but at the same token, this doesn't look like an overly bullish pattern to me. I think it's undeniable right now, though, that TLT is in a coiling pattern. We can see we have this main resistance line that has not been broken since, October of 2024, moving all the way down here. It's not been broken, but we also have a support line down here. We wicked below it one day, but it hasn't really been broken yet either. And of course, this yellow line is a main support line as it is. So this is really indicating that within the next maybe week, TLT is going to make a choice. Currently, it is under a main resistance line here in purple, but it's also above some pretty key supports. But what are the targets there? So if this breaks to the upside, at minimum, we're looking at an upside target of around 94 and a downside target of roughly around 85, maybe 86. But for all my bond people that are out there that really understand interest rates a lot, I would love for you to leave a comment down below. Give me your thoughts on what you think is going to happen moving forward. And we're about to move into the Dixie, which obviously has a pretty strong effect on long bonds. Taking a look at Dixie, I'm starting this out on the weekly, and this is zoomed way out because the first thing I want you to see is this main supply area, this supply zone right here. This goes back all the way to the 2000s. And notice how every single time we got up into that or we touched this main resistance line here in purple, we always rejected very, very sharply. So with this in mind, let's revisit what I covered before. I said before that this kind of really looked like a falling wedge pattern. And if it is legitimate, if this is the breakout point, the dollar is targeting somewhere around 111 to 112, which would put it right into the supply zone. And I even shared this coiling pattern on the RSI before it broke out. And I said it's very, very likely for the dollar to break out. But even I did not anticipate the dollar to break out like this, pull back just a smidge, and then just keep blasting off. But I guess honestly, I should have expected it because markets like to move towards areas of big liquidity, and this supply zone is the main liquidity. And when we look on the daily RSI, we can see we obviously have bearish divergence that's forming here. But if we remove that, we have a bit of a bearish divergence even between these two peaks because we have a lower high here, whereas here we've obviously made a higher high. So I think there's a definite possibility that this channel will break, but then we possibly meet support and then continue to push higher. And I even shared in one of the previous videos that this main resistance line here in green, I was not expecting it to get broken, but it obviously got broken. And as long as we're above that resistance, and we've obviously confirmed it as support right now, the dollar is still pretty bullish. And you've got to keep in mind, a strong dollar is headwinds for companies. Foreign countries have to exchange their money for US dollars if they want to buy US goods. If their money can't buy as many dollars, they can't buy as many goods. So we are absolutely going to see these reflected in future earnings. And if you've ever been trading and you're watching the Dixie go up as the market goes red, that's why the market knows that a strong dollar is not good for business. You know, I love following the ADD, and no, that's not what I have, although I do. And this is a market breadth indicator. So when we pair together what's been going on with the RSI, we had this trend line here. Anytime we were above it, we bounced. Anytime we got below it, we rejected. Obviously, we were rejected recently. We had this symmetrical triangle pattern that broke out on the overall market. And as I always like to point out, there's a lot of times, I would say 70 to 80% of the time with symmetrical triangles, we have an initial breakout that's false, and then we have the real move. So this, in conjunction with us being at the main resistance on SPY and a decent amount of resistance on the Qs, actually would lead me to believe it's more likely that the market is about to turn over and turn red, unless the market is just so ridiculously bullish that there's no rhyme or reason to it anymore. It's just buy, buy, buy. On the VIX, I shared this before the election. I said that if this broke to the upside, we're going to be moving into the 30s. But if we broke to the downside, this was targeting around 12 on the VIX. Obviously, after the election, a lot of uncertainty was out of the market, and the market just rallied. So we got this big, massive push to the downside. But as you can see, the VIX has moved into this ascending channel. It did it for a few days. There was a lot of volatility. Now it's broken that channel. So I have to wonder if this pattern is going to complete. If it does, if the VIX continues down, typically a decreasing VIX equates to an increasing SPY and QQQ. Although it's not always the case. Sometimes you can have an increase in volatility at the same time that the market is moving up. But I'm absolutely keeping this pattern and its target in the back of my mind. And if we see VIX continue to move down, it could move towards that main support area around 11 to 12. So I'm just going to give that quick reminder that nothing I've said is financial advice, and you should always do your own due diligence. If you're enjoying these videos, please like, share, and subscribe with somebody that you think will enjoy them or maybe could benefit from them as well. And really, because it lets me know that you're enjoying these videos and that it's worth my time, these 5 to 6 hours of analysis and recording the video to actually make these, because I want to do this because people are actually getting something out of it. And now here is this week's trading rule to live by.